pay $200 a month on your installment agreement.
What is the statute of limitations for unpaid income taxes?
Before I answer that question,
Okay.
I want to go back to the last question and make one other comment.
Okay.
And that is, when you do submit this information to the IRS, the name of the game is full disclosure. And this is where people get into trouble. You know, you tell them about your assets, but you forget to mention that acre lot you have up in Idaho.
Yeah.
And you sign that under penalty of perjury.
Oops.
You're probably not going to go to jail for not paying your taxes, but you enhance the possibilities if you lie on a statement to the IRS. That's a crime by itself.
Yeah.
So
be careful.
So the name of the game is, if you're going to play the game, it's full and honest disclosure, because the consequences of not doing it correctly can be very severe.
Yeah.
Now, you know, yes, can there be innocent omission? Sure. But it's hard to omit a $100,000 bank account in a different state that you have because you don't think the IRS can find it, or real estate, or, you know, whatever.
Maybe we should mention just very briefly again that there are circumstances, you know, maybe you don't owe so much money, or it's going to be resolved in a fairly short period of time. In those types of circumstances, you can usually work something out without having to do a lot of financial disclosure necessarily.
You're always going to have to file some minimum financial information for the IRS.
I guess I've been lucky on a few cases, because they've just, okay, well, you know, it's going to be paid in 90 days, forget it. You know.
Oh, yeah, yes, in a very short-term thing like that. If you're going to pay it in
Yeah.
90 days, yes, but typically an installment payment is years.
Okay. All right.
So what's the statute of limitations?
So we were talking about statute of limitations.
On collection.
So, yeah, so that means that, okay, I haven't been able to pay it, and it's a long, long time ago, so now the IRS can't come after me for collection anymore.
10 years.
Okay.
10 years from the date the taxes were assessed. And remember, the assessment is a technical term. It means the actual creation of the account receivable from you on the IRS's books. And it can be extended by agreement. The IRS can't just say, we want 15 from you, 15 years from you, so we'll change it to 15. No, it's a statute. It's 10 years from the date of assessment, but you can, by agreement, give them more time. And why would you do that? Well, because they might say, if you want to pay us at $500 a month, we want to make sure we have enough time to collect it, so we're going to extend the statute for whatever.
Yeah, and otherwise they can take other collection action, they can try to take property or whatever.
Right. I mean, that's why you do an installment agreement, to protect yourself from enforced collection.
Okay, so time is going here, and we're going to cover an issue that I think will be of interest to a lot of people, because this is where we see so much publicity, or maybe we should say advertising, and it's the offer and compromise. And so let's talk about it for a few minutes. What is an offer and compromise, and is this a viable alternative?
An offer and compromise, as I mentioned earlier, is the only procedure to settle a tax debt with the IRS for less than full payment. And you've probably all seen the ads on TV. You know, I owe the IRS $94,000 and settle my debt for $17,000. Okay, yes, it is viable if you fit into the formula. Mm-hmm. And I'll give you a real quick OIC 101. The minimum amount they'll take is the sum of two numbers. The first number is your equity and assets, and that's basically everything you own, with a couple of limited exceptions. That's easy to figure. I mean, if you've got a house that's got $100,000 of equity, that's an asset. Mm-hmm. If you've got an IRA or a 401k, it's an asset. There are some rules on valuing that I'm not going to get into. If you have $100,000 equity in one asset and you're upside down $100,000 in another asset, you don't have zero. You still have $100,000. They don't net the negatives. Okay, now let's talk about the other factor. It is an attempt to put a value today on what you're going to earn in the future that you're going to be able to pay the IRS. And the starting point is the same thing as for the monthly installment agreement. It's net monthly disposable income. It's basically the same analysis. Okay, so I can afford to pay $500 a month. How do I translate that into something that I can talk to the IRS about satisfying my obligation? Well, there's a complicated financial formula called the present value of an annuity Basically, if you need to pay $500 a month for 60 months, you don't need $30,000 today. You need a smaller amount because you can put it in the bank and earn interest. There's a formula for calculating how much you need. The IRS has shortcut that, and basically we're going to multiply it by 48. So instead of 60 months of payments, you need 48 months of payments. So if it's $500 a month, it's $24,000. Add that to your assets, your equity and assets, and that's the least they'll take. And if your offer isn't at least that much, you're not a player. As far as if it's a viable alternative, there's a couple of things you have to keep in mind. One is there is a $180 application fee just for filing an offer. But the big problem with offers today is that the current rules require you to pay, at the time you submit the offer, 20% of the amount you're offering. So if you owe them $100,000 and you're offering 20, you have to give them $4,000 today. And you don't get that back if they say no.
Yeah,
and by definition, that's money you don't have. Yeah. It's money you're going to have to borrow or receive as a gift from somebody, and they're not going to get it back.
Right.
So it's a very big problem today in offers in compromise to get over that hurdle.
Yeah, and that was a change that happened just a few years ago, but it's made a big difference. Okay.
The other thing about offers is if you had everything all ready to go today, all the paperwork filled out and the checks and everything, and they sent it in today, probably at least 6 to 12 months before you get anywhere down the road.
Yeah. So it can take a long time to process these things, and meanwhile you're on pins and needles, you know, wondering.
You're on pins and needles wondering, but the other side of that coin is that as long as your offer is in process, and you're probably immune from any enforced collection like garnishing wages and seizing assets.
So your collection action is suspended.
Right.
Okay, very briefly, we're really sort of out of time, but what do you do when an IRS agent shows up at your door and says, I'm a revenue officer here to collect the tax you owe the IRS?
Don't invite him into your house. My preference would be talk to my lawyer.
Okay.
Because I don't know what I'm doing here.
Yeah. So time to get.
And they will tell you. And they will tell you, you don't need to talk to a lawyer.
Yeah.
And I think the proper response is that's not your decision.
Yep.
And if you say I want to talk to a lawyer, they will respect that and they will go away.
Good. Okay. Well, we're all out of time. So I want to thank you again, David, for being with me today.
Mike, it's been a pleasure.
It has been a pleasure. I hope that we get a chance maybe to meet again and go over other issues or possibly go over some of this material again to remind people. But anyway, this collection issue is an important one, especially these days when so many people are dealing with financial reverses. And with that, folks, thank you for joining us and watching today on Financial Insider Weekly, and I hope to see you next time.